Time now for an in-depth look at the market news on this Friday. And for that, I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, stocks on Wall Street closed lower overnight. A lot going on there. Jobs numbers, retail sales. What's the story in the global markets?
Yes, Dow Jones lost about 136 points, or 0.5%. S&P was also down by 0.3%, and Nasdaq retreated by about 0.7%. But the percentage was actually relatively less than the beginning of the market. If you look at the Wall Street, Dow snapped the 4 days rally as the escalating numbers of COVID-19 cases and hospitalization in multiple U.S. states raised the fears of slower than expected economic recoveries. On the pandemic side, Florida announced it is facing remdesivir shortages, while the New York governor threatened to close restaurants over the social distancing violations. On the macro side, as you said, a lot of news were coming out. The jobless claims in the U.S. rose by more than 1 million for the 17th week in a row, triggering fear of higher than expected permanent unemployment cases. On the policy side, basically they're aiming to do further boosting measures, so people are kind of confused at the current point in time. If you look at the Asian markets, it rebounded slightly. The Chinese market suffered significantly yesterday, falling by 4.5%, and falling for the Shanghai and Shenzhen was down by more than 5%. Such a huge drop has, created fear, but with the U.S. market showing relatively less decline, Asian market rebounded slightly. Most of the markets were up slightly. Even the Chinese market has recovered slightly, particularly for the Shanghai's Shenzhen index. It is up by about 0.8%, and most of the other Asian countries have recovered slightly.
Now, Mr. Yu, the Korean currency has been holding steady for a while now, it seems, at around 1,200 won to the dollar, a little higher than that. It's down from its highs at the peak of the coronavirus outbreak here in Korea. So where do you see the exchange rate going, and what's going to drive that movement?
Well, if you look at the post-COVID-19 cases, if you look at the currency, it did depreciate as much as 1,242 won to dollar. But after that, we saw in June, it went down as low as 1191. So quite a large variance of about 51 to dollar rate. Now, currently, it has come up a little bit. Now it's staying at around 1206 level. We think that the box range should remain to be there. If you look at U.S. numbers, particularly the dollar index movement is very important. At the current point in time, it is the case there. International capital outflow is happening from U.S. In May. Overseas investors sold about 4.5 billion won worth of U.S. assets, and that is resulting into relatively weaker currency of dollars. And that's why probably is affecting the Korean won to appreciate quite significantly from the peak of 1242 now at 1206. When you look into the future, we think that the Korea having a relatively low leverage ratio of government bonds, government debt, and if you look at the current account side, it is having quite a bit of surpluses. Of course, it is down from the peak, but nevertheless, it is quite sizable current surpluses. And therefore, we think that Korean won should not be depreciating further as the U.S. dollar remains to be quite weak. So we think that the range anywhere between 1190 to 1220 should be the future range bound for Korean won in the future.
Well, the latest Green Book from the Korean Finance Ministry has, you could say, a more pessimistic outlook for the local economy than it did last month, in large part because this whole thing is dragging on. What do you make of that report, Mr. Yu?
When you look at this, I think that the government is trying to get some leeways to do aggressive boosting measures. Of course, there are quite a lot of changes happening, but if you look at the one major changes is the level of the daily virus cases, the COVID-19 cases. it has risen to around over 50 patients per day, which fell about a month ago. It was much lower than that. Now it has averaging up a bit. And clearly that is causing concerns about the economic recovery might be slower than expected, particularly on domestic consumption side. And if you look at the export numbers, it continues to remain slump. And that is resulting the Korean government ministry to talk about how the economy is weaker than anticipated, and they're worried about that. Now, with this kind of news, this kind of supports the President Moon's aggressive boosting measures that recently announced. South Korea more than doubled its spending plan for the New Deal program. They're talking about 160 trillion won, which is about 133 billion US dollars, and clearly underscoring its ambition to recover from the pandemic by reshaping the economy around technologies. The plan was announced on Tuesday. Still, people are kind of doubtful on this issue. And that's why I guess the government is talking about how the economy is kind of fragile, and therefore they need to have this kind of aggressive fiscal policies to boost the economy. We think that this is the right way to handle the current situation. We clearly need additional investment as well as strong consumption numbers. For the time being, we think that it is weaker than we hoped for. So with this kind of announcement, we think that the boosting measures should cover some of the losses that we have seen in terms of economic growth rate.
Very interesting point of view. Mr. Yu, thank you so much for sharing your insights today. We appreciate it.
Thank you very much.